Hey guys, this is Vasyl from the Dance, and today I'm gonna comment on the episode from Dave Ramsey show. So check this out.
Oh, great. Glad you called, Julie.
Rachel already likes you. I can tell.
She's so nice.
She likes your attitude.
She seems
Right?
very nice. Do what?
Oh gosh. I said I can relate to you because you're a mom like me.
It's
but
not
you're on the
fair. I
opposite
can't be
side.
a mother. I'm kidding.
Oh, they're amazing. I
I
have.
can't be a mother
I have a
either.
primary question, and then I have a few other questions as well. But my primary is, I sell real estate, and so I'm really good at making a bunch of money really fast, and I'm not so great at keeping that consistent. So the last 3 or 4 years of my career, I've been living on gross commission income and not net. And so I'm in trouble with the IRS.
Oh boy.
And so I owe the IRS $150,000
Holy
a
mackerel.
lien on my home, and I'm wondering if I need to sell my home in order to take care of that. This last summer, we had a series of unfortunate events in our family, which has never happened before, and that was multiple car accidents at different times, which depleted our savings account, our HSA and medical savings, and so we're really starting back at baseline for savings as well. And so I feel very vulnerable just even calling today and asking, like, where do I even start?
So you see, from this segment we can tell it's very easy to get a tax problem. It doesn't take much. You see, this family is going through a rough patch. They got into multiple car accidents, and it just worked out that somehow people in her family were getting into multiple car accidents. So they obviously had hospital bills and other bills. It depleted their IRA, HSA. So when you're under so much stress like that, it's very easy to overlook things such as tax filings. So it's to say that people who end up in a situation with the IRS, it's not like they are bad people, but it's like because of certain life circumstances, they like in this latest case, they ended up in a situation like that. It's not that hard to get a tax problem.
So thankfully, our debt is relatively low, and I have $60,000 coming in for income the next 3 weeks. When these unfortunate events happened in our world, late July, early August, the like nail in the wall for us was my real estate income, everything that was in escrow, which was about 5 transactions, like exploded. They fell out of escrow for a variety of different reasons, and I didn't have any income coming in until just now this month. So we were able to pay and cover all the bare minimums. We cut our budget in half, do all the have-tos. I mean, we got down to bare bones. And
Who's
and
we,
I'm really
Julie?
proud of us for doing that. My husband and I.
Okay, what does he
We have
make?
3 teenagers. He makes 84.
Okay.
I thought like the answer to the question who's we would be we the people of the United States of America, but it was a different answer.
And I sell about 10 million a year, which brings in growth about 300. But again, it's not consistent. And I think that I would say I'm more comfortable saying 8 million.
So we're talking anywhere between 2 and 300K is fair
Correct.
for the last
Okay.
few years. Okay.
Has the IRS been in contact with you? Like, what are they saying?
So I don't know if this was legit or not, but I had a company help me get on a payment plan with the IRS, and I can't locate them anymore. I paid them $2,000 or $3,000
Oh, no,
to get me on a
Julie.
payment plan, and I'm so embarrassed.
No, yeah.
No, it's okay. I feel bad.
Like,
Yeah, no. Well,
Um,
when you're in a vulnerable state like that and you're desperate, you kind of just make decisions, and usually in hindsight, you look back and you're like, oh, wow, my desperation drove some of those unwise
Yeah.
decisions, right? But when you're in that pinch, you're like, what's anything I can do to help this situation? So, that I understand how that happens, but okay, so
The little bit of debt that we have left, we've got $25,000 in credit cards. Partially, a lot of that was put on just so we could make it through these last few months. We've got one car loan at $6,000, and then student loan $15,000, and then that's it.
okay. Well, the great thing is, Julie, you guys make great money. I would move this IRS debt to the front. I would stay current on the student loans and the car and the credit cards, but I would not be paying extra on anything. I would pay minimum payments on all of those. And I would put as much as I could towards this IRS debt. The IRS debt is always kind of.
So you see, that's one of the things that I was talking in one of the episodes about the fraud in the tax resolution industry. See, there are bad guys out there. So this lady got with some tax resolution firm. They cheated her out of $3,000 and didn't do anything for her. And as Rachel is saying, it's understandable, because if you're in the predicament like that, it's easy to get yourself not to think your decisions and your steps through and make mistakes like that. So it's understandable, but it's just a reminder. Even in a situation like that, it's important to do due diligence. Make sure that the people that are helping you are licensed professionals, that they are established, that it's not going to be a situation like with this lady. They took her money, now she is contacting them and she cannot locate them. So it's like still need to do at least basic due diligence to make sure we're working with legit tax resolution companies. Then the second point is Rachel is advising her to focus all the efforts on the IRS debt. So the assumption there is that the amount that the IRS computed is correct. So the assumption is just pay it off. Towards the end of the video, we'll see that they do direct them to their tax professionals. But that's one of the things a lot of people do. They assume that the notice must be right. Oh, it came from the federal government, so the number must be right. Well, not necessarily. So the first step would be to check to check the transcripts, to check the records, to make sure that number is true and accurate, because there is a possibility that the IRS made mistake and that's not the actual number that's owed. And the IRS makes mistakes all the time. So that's a reminder that rather than, so one extreme is not to do due diligence to the tax resolution company you give your case to. Another extreme say, oh, just pay it, just focus and pay it without verifying that number is a true number because it came from the federal government. So that's some of the learning points we can take from here.
The red flag debt when we hear people, because they can garnish wages. I mean, it's insane, right? So like we want them out of your life as soon as possible.
It gets a fast pass to the front of the line.
It does get a fast.
See, and what she is saying here about garnishing wages and levies and so on, and that the IRS is insane, that part is very true, because like the IRS is the most brutal collection agency on the planet. So like it's not a joking matter for sure. It has attention must be paid and it must be resolved as soon as possible, but it has to be resolved correctly. Just tell somebody to pay it off in full is not the best advice.
Pass through the terrible ride of life sometimes.
For Rachel.
Thanks, I appreciate that, George.
To lighten the mood.
So the 60. So what I would do, Julie, honestly, because you're amazing. Like you're an incredible at what you do. Obviously, the market isn't necessarily on your side right now. Like it's been probably in the last 3 years. So you're probably feeling a little bit of that. But if I were you guys, your husband makes great money. I would just say, hey, you've already cut your lifestyle in half. What's the bare bones we could live on? Because if you guys could find a way to live on 70, right? That frees up $14,000 of his income, all of your income, and together you guys could get this debt out, within I don't know, a year, 13 months.
So it's something really cool that Rachel is saying, that Julie is amazing at making money, because think about it, her husband makes only $84,000 per year. This lady is killing it. She brings in $10 million in revenue from her real estate business with $300,000 or so profit per year. So she's amazing is an amazing person for business. But you see, it's a reminder. Is like she's like excellent in what she's doing in selling real estate. So we have a strength and weaknesses. So when we do a business, like we may have a particular strength in something, but not necessarily in taxes. So it's a good idea to delegate it to people who are strong in taxes and can really apply their strength to solving taxes. So it's a great point that we can make from there.
If you guys really, really, and if you hustle, Julie, if you were like, all right, I'm laser focused, if you guys called me and you were making 70 and that was it, then there may be some really big conversations we'd have to have. But I don't know, George, you chime in, but I feel like
I'm
because
going, Julie, you're going to make 150 grand in 6 months, potentially, right?
Yeah, I really shifted after everything stopped. I expanded the market that I was in and just took anything that was coming in, and it's the fruit is here.
Good.
Yeah.
So that's the deal. Think about it this way. In 6 months, you could have this IRS debt paid off. But here's the key.
I know.
That money from your real estate doesn't even touch your life. It hits your bank account, it goes right to the IRS. That's it.
That's what you want me to do?
Yes.
Like put that as primary. And
Yes.
Every single
Yes.
cent you make from real estate right now, go to the IRS. In 6 months.
And here he makes a similar assumption that number, that 150,000 owed to the IRS, the assumption he's making is true. Again, as we were saying, it doesn't mean it's true, but he is saying assumption is, let's assume that it's true and make every single dollar you can to this debt. Well, what if the number is wrong in the first place? So going back to the assumptions, like checking assumptions, they deal, and I understand that their strength is helping people to get out of get out of debt, of consumer debt. So they are not like tax resolution professionals, so on. So that's not their focus. But at the same time, it reminds us of the expertise needed to solve it, because if you go to the tax resolution expert, he will check if the number is true first, not just advise, oh, just go ahead and redirect all the cash flows to this debt, make sure it goes away. So that's the caveat there.
Once the IRS debt is paid, if you make 150 gross, right?
Mm-hmm.
Now we still have to worry about taxes for the future income you're making, but then we can knock out your other debt. You've got what? Another 30. How much did you have total? 25, 6, and 15. So you got 46 in consumer debt
I would do
after
the car
that.
first.
See, but one cool point that he's making is that you'll have to worry about future taxes, such as like making quarterly payments. So it's good that he helps her develop vision of the future and say, hey, in order to correct the situation from happening in the future, make sure when you do these cash flow calculations, make sure you factor in the tax burden you'll have to pay for per quarter. So he makes a very good point there.
Yeah.
So just knock out smallest to largest balance from there. That's probably going to get knocked out 3 months later.
Are you guys budgeting, Julie, at all, you and your husband?
Oh, yes. We have weekly budget meetings now.
Okay.
This is all new for us, like the last
Yeah.
couple of months.
Do you guys use Every Dollar, our budgeting app?
I do. I do, because it's a daily going through our bank account. He's wired differently and likes the spreadsheet.
Okay.
So,
No, that's good. I just want to make sure, that
Julie makes a very cool point, that her husband is wired differently than she is, because she likes Ramsey Every Dollar app, but her husband likes spreadsheets much more. So the importance of taking into account that each of us may be wired differently. Like I can have this tendency and my spouse another one, and even though we can use different tools, but the idea is to get on the same page as a couple in that budgeting, even though one prefers spreadsheets and another prefers app. So
that you guys have some kind of plan that you're doing, because that's going to be helpful too. And it's going to be uncomfortable, Julie. I mean, I know you already feel that with already cutting the lifestyle down, but you're a high producer. I mean, you're amazing of killing and doing so well with your work. So income-wise, I'm not worried about you guys, because you're bringing in great income.
Yeah, a year from now, you could be
Yeah.
completely debt-free with an emergency
So
fund.
I think the thing is, Julie, it's now up to Julie and your husband to like look at yourselves, and I'm sure you have, just to be like, okay, we're the problem. Like, we shouldn't be in this situation because we make great money. And so making sure our taxes are done correctly is very important. And then making sure we live within our lifestyle. And when you do that, it changes the game. Like you guys will.
Yeah, you see, and here we talk about delayed gratification, and Julie talked about that she took a lot of work, but it paid off. And now Rachel talks about delayed gratification of making a plan to pay it off. And when you live on a tighter budget, it's difficult to adjust because you were used to live in a much higher budget, but ultimately that delayed gratification pays off. And she does mention the importance of planning budgets, but also tax planning and making sure we account for the tax considerations.
Will be able to actually enjoy your money that you've worked really hard for, and you shouldn't have to depend on credit cards to make ends.
See, she said enjoy your money. So what's very important, sometimes we don't know what we're trying to achieve. Some people don't even have goals how much money they want to have to make this year. So if we don't have a clear goal, it's like, first of all, we deprive ourselves of joy of achieving the goal, because like even like regardless of what a specific number it can be different number for different people, but establishing some goals, some baselines, and then we achieve that, it's like it's super rewarding to achieve the goal. And then once we achieve it, we budget it in different categories, including for fun stuff. That way, when we allocate and use it, we don't feel guilty. Oh man, like why am I using this money? But we specifically budgeted for these fun activities, the percentage of what we made, and it's like one of the things that bring joy. I mean, they also talk a lot about giving. They started their budget with 10% giving, because we talk about like what are our non-negotiables, what are our priorities, what are we trying to achieve in life. When we write those things down, we are much more clear about our purpose, about our vision. So when we achieve those goals, we can truly enjoy our life.
Meet anymore. You shouldn't have to, take out a car loan for a car. Like
no more living La Vida Loca. It's over. I'm sorry, but here's what you do need to do.
I love this guy's sense of humor. It's like no more vida loca, like vida loca, crazy life in Spanish. So like so sometimes like we get in this like vida loca scenarios of life, and it's like we have to tell ourselves, hey, no more la vida loca. Let's change something.
Go get in touch with a Ramsey Trusted Tax Pro at RamseySolutions.com. They can help you navigate this. You don't need to get on a payment plan with some sketchy company.
Don't do that again. Yeah.
They'll help you navigate this, but it's time. And from now on, quarterly estimated payments. That is how you avoid the IRS down your back and how you stay on top of this stuff for anyone out there who's on that kind of commission type job. This is The Ramsey Show.
You see, all the way at the end, they do refer her to their tax professionals to help her with a payment plan or some option. So like finally we did get to the meat of the advice to work with the professionals and work something out. And then his point about the estimated payments for the self-employed people, because when you are self-employed, it's easy to skip estimated payments and then you get penalized on the tax return for underpayments of estimated tax. So that was a super important point he made. So yeah, like excellent show here for people to get rid of consumer debt, and they made some good points, but it goes back that their main goal is to help people get out of debt, not necessarily help people with their tax problems. So when we talk about tax problems, it's very important to go to the professional, as he directed her, Julie, to talk with their tax professionals. So yeah, like we live and learn, and it's good to learn something new each day, and thankful for their show and what they do to help people out to get out of debt. And but look, regardless of what we listen, let's listen to them critically and see, well, maybe this person is an expert in this, but not necessarily that. So even though it can be a good show, let's still not lose a critical thinking skills. You see if all of that applies, or perhaps this portion is pretty good. We take what we like and leave the rest that we think is not gonna serve us. So thanks for watching, and have a great day. Cool bees.